Welcome to India Market Close, and what a turnaround from what happened in trade yesterday. Just look at the markets today, and we are back to the levels that we ended on Friday. I think all of the losses of Tuesday have been erased by the gains done on Monday and today. So 3% higher, nearly at the high point of the day. I don't think too many people would be complaining about this particularly. Bulls or bears, everybody's gotten the chance if you are swift enough. Banks are participating, large cap, mid cap, small cap, everything is participating. 2,082 points for the Nifty Bank, and the mid cap and the small caps too are participating. Let's get the heat map up on the screen. There will be very few losers because Hindalco, which was in the green, has also turned in the red. I doubt, maybe an odd BPCL, which is surprised with crude prices done what they've done, and LNT a little bit, but otherwise almost everything in the green. Just look at the gains that have come into financials. Look at the gains that have come into almost agrarian themes. I mean, M&M being up 6%, aside of the company specific reasons, also probably got to do with this whole feeling that everything related to agrarian and rural will probably do well. So no surprise that that stock is doing what it is doing. But autos by and large are doing well. Adani Ports, yesterday's key loser, is up about 5% as well. And Hindalco is the surprise. Just before I hand it over to Tamanna, just shows the ferocity of the up move today. Let's get the Hindalco intraday chart. It started off 5% lower on the news that the Novelis IPO has been postponed, and it's now up 5%. Just look at the kind of move that you've seen in a metal stock, not policy linked, but just the sentiment turn in the session today. Tamanna, brilliant afternoon for the bulls.
Yeah, and there are a couple of reasons that have triggered that. One is Mr. Chandrababu Naidu coming and reaffirming his participation in the NDA unequivocally. He's arrived in Delhi, and we'll get that picture up for you just a few minutes ago. Prime Minister Modi has officially staked his claim to form the next government with President Draupadi Murmu. So those concerns now getting completely wiped out. Now it's all about what that government looks like, you know, the bits and pieces, who gets what ministry, etc. So that's one of the big reasons you're seeing this gain. Fortune favors the brave. We said this yesterday. Those who had the jigger yesterday to stick their necks out.
1,000 points in the green on the Nifty.
1,000 points in the green. You know, this is just insane across the broader markets as well. Actually, we'll pull up the India VIX first, because that's a very good representation of what's happening. And India VIX down 28%. Remember, at its peak, this was up 40% yesterday. So India VIX at 19. I mean, the volatility index has lived up to its name. Gyrations from 30 to 19 today. So this is telling you the story. On the broader markets, the mid-cap and small-cap indices also part of the party. I mean, why not? 4% up on the mid-cap 100. The small-cap index also 3% up. I'm going to pull up sectors, the sectoral indices, because like Niraj said, pretty much everything is up in the green. So it's all about relatively what's doing better. Metals, they're right on top. There's just nothing in the red today. Everything. It's a sea of green out there. Nearly 4.5%. Banks, auto, consumption, FMCG, everyone's a winner. I know we've been talking about results today in the markets. Everyone's a winner. Some key notables perhaps among the metals: Nalco, SAIL, Hindustan Copper, Hindustan Zinc. Some of these have been doing very, very well. Look at the gains there, 10%, and in that region, 8% up on SAIL as well, Hindustan Copper, Hindustan Zinc. I would point out Vodafone and Indus as well. Actually, that entire group stocks are doing okay today. Vodafone and Indus have completely joined the party. Vodafone 12% up at 1485. I mean, you're still a far away from its lifetime highs, etc. But the point about wiping out most of the losses of yesterday, it's a quick turnaround and a quick recovery. Indus also up 8%. So yes, those who had fortitude and the stomach for this volatility are laughing their way this afternoon. The FMCG boom continues. Emami, Dabur, Marico, Colgate, HUL, just few of those. Emami is an astonishing story. They also had the numbers to back it up. Remember, even before all of this, Emami's quarterly numbers is something that the street was quite happy with. That's about 11% up. What's on the downside? Defense is still weak, and one could argue that high valuations come at a cost after a point. So that froth was there, and a Bharat Dynamics and a Cochin Shipyard, for example, are not really participating today. Bharat Dynamics nearly 9% down. Cochin Shipyard also not looking great. But it's all about politics right now. Let me go across and play out for you what Eknath Shinde, the Chief Minister of Maharashtra, is saying.
आज इंडिया अलायन्सची ही बैठक आहे.
आता म्हणतात ना, गिरे तो भी टांग ऊपर, तशातला प्रकार आहे. कारण त्यांनी अगोदर देखील म्हटलं होतं की एक मोदी द्वेषाने पछाडलेले लोक, मोदी हटाव, मोदी हटाव, मोदी हटाव, मोदी हराव, मोदी हराव. बघा, दुसरा काय अजेंडा त्यांच्याकडे नव्हता, पण मोदीजींकडे विकासाचा अजेंडा होता. आणि काही लोक म्हणाले आता मोदीजींना तडीपार करा, तडीपार करा. तर या देशातल्या जनतेने बोलणाऱ्यांना, इंडिया अलायन्सवाल्यांना सत्तेपासून रोखून त्यांनाच तडीपार केलेला आहे. त्यामुळे मोदीजींच्या विकासाला लोकांनी मतदान केलं आणि एनडीएचं मेजॉरिटी झालेली आहे. त्यामुळे मेजॉरिटी झालेली असताना तुम्ही सरकारची स्वप्न.
Well, I think political voices will keep on coming. It's important to dissect what to do in a scenario like this. Hemen Kapadia of KR Choksi, Stocks and Securities, joins us right now on the show. Hemen, good afternoon. We are going to try and play a bit of a rapid fire, Hemen, because we want as many answers from you as possible because it's a packed show. So I'm going to start off with asking you if you would take a fresh trade on the index at these levels, either the Nifty or the Nifty Bank.
Niraj, I know you for 15 years now. I consider you to be I respect you and as a friend. And the first question you asked me is a bouncer straight off.
But it's not a bouncer. It's the most expected bouncer. You anticipated this bowler, a burly, tall West Indian bowler, to bowl a bouncer at you. Now deal with it.
Okay, I'm wearing a helmet, but yeah. So, frankly saying, I'd wait just a wee bit. But if I were to take a position with a gun at my head, on the spot market, 22,450 would be my stop loss because the bounce is underway. The VIX is down, but the VIX won't go to sub 15 till the swearing in ceremony comes in. So from 31.5 to yesterday to 25.5 closing, VIX is sub 20. And in the last two times, whenever the election results have been declared, that week, the VIX comes and closes somewhere near 15, 16. So I believe that we are on the recovery path. A bit late in the day, but I prefer to be more stock specific. But yeah, once again, 22,450 would be my stop loss for a trade on the Nifty.
Okay, so that's on the index. And Hemen, a clutch of stocks flying around, so it might be easy or difficult to choose what do you bet on. What do you bet on?
Okay, there are two stocks which I like. One Niraj is Bsoft. Simply because IT is oversold, downside limited. Bsoft hasn't broken the bottom and the market has gone completely haywire. So there is a little bit of resilience, positive divergence. The oscillators on the daily chart are all buy without getting too technical. So Bsoft is something which looked interesting in a buy at 630. Stop loss of 605, target 680. The second one is UPL. UPL has been in a base formation for quite some time, Niraj. And this quite some time, I mean, this is the fourth month, 4.5 months and counting. We've made progressively higher tops and bottoms. Indicators are positive, and we are on the cusp of a breakout of a 530. So buy on UPL at 525, stop loss 505, target 565, and anything else on the IT space warrants a punt from a 2-week point of view, a 3-week point of view, Niraj.
Hemen, hi, good afternoon. Tamanna here. All right, you've done the picks, you've done the levels. What about the strategy going into the rest of the week? Because all right, even if I balance out a terrible Tuesday against a wow Wednesday, now what to do on Thursday and Friday?
Well, hello Tamanna. I'd say once again, if we can just leave the indices out of the equation. There are a lot of stocks which are flying around and many of them are looking interesting. You have cement looking interesting. You have banks doing well. IT has been, FMCG has run its course, not run its course, but it's had a big move. So in the entire IT pack, even if you pick or choose something individually, Tamanna, it makes sense. Or if you want to go for a high beta move, anything, even something like an Axis Bank or on the Bank Nifty is going to help propel the markets higher. As of now, the bounce is on, and it was mayhem. But as of now, all the hourly mechanical indicators have just given a crossover buy. So I believe for the next couple of days, not with the same intensity, markets should be better. 5,000 point range on the Nifty, 2,000 point range on the Nifty, 5,000 point range on the Bank Nifty. Yesterday's lows are a temporary bottom, the way I see it.
All right. Yeah, Hemen, in terms of some of the FMCG counters which are completely, going berserk for the last couple of days. In fact, for them, the last 2 days have just been fantastic. Anything you like particularly? Emami, Dabur, any view over there?
Emami, a bit late in the day. Dabur, Lever, all of them. I think Dabur is relatively, I would say, cheap. Why? Colgate all-time high. Emami at the 5-year high. Lever, I believe, is almost at all-time high. And so Dabur is relatively technically cheap. The monthly breakout comes in about 610. So I'd go for Dabur.
All right, so right on cue, we have Mahima with us talking about what is happening with the FMCG sector and the reason that you're seeing that kind of an excitement. Mahima, a lot of brokerages also reckon that the next government will focus on rural spends and that will in turn help the FMCG sector.
Right, Tamanna. So since the past 2 trading sessions, we did see a surge in the FMCG stocks, and this is because markets are now turning to a defensive play. I'll start with the top movers in the last 2 trading sessions, where Radico Khaitan moved the most with 8.5%, then Godrej Consumers with 7.8%, Marico with 6.8%, and then United Spirits and Tata Consumer Products. Now, key factors which are leading to this positive outlook, well, a couple of things. Political climate. The current government's status may lead to increased focus on pro-consumption initiatives. Also, rural revival is something that is on the cards of a lot of FMCG's company. We are seeing green shoots in the rural demand. Also, we are seeing a turnaround in terms of demand, and a favorable monsoon will also lead to demand surge. Then, in terms of welfare reforms, where renewed attention to welfare reforms is expected, and this will uplift the lower income segments, which will eventually translate into a higher consumption, which is why these FMCG stocks are buzzing. Now, in terms of rural green shoots, well, couple of reasons why the rural demand is recovering: uptick in farm income, declining food inflation, and expanding distribution footprint. Now, in terms of what the brokerages are saying about these FMCG stocks, I'll start with MK on consumption stock. Well, what they're saying is they've upgraded HUL to buy, Nestle India to add, and ITC they've downgraded to add from buy, considering the current market conditions. And they now prefer stocks like HUL, Dabur India, Bikaji and Honasa. Then we have Prabhudas Leeladhar on FMCG stock. They're saying that favorable monsoon forecast and future RBI rate revision will drive the consumption sector overall. Their top picks are HUL, Britannia, Godrej, Marico, Dabur, Emami and Varun Beverages. Lastly, in terms of revenue and margins, outlook in terms of FY24, revenue is expected to have a double-digit growth, with Tata Consumer witnessing an 18% growth in terms of revenue. In terms of stocks like HUL, ITC, Marico, Dabur, Nestle will have a growth between 8 to 11%. But in terms of margins, there's no expectation, there's no kind of margin expansion on cards as per the Bloomberg estimates. Hardly a 1% expansion may be seen in some companies. In terms of valuations, well, high valuations with marginal dips will take place. Currently, these are the top 5 companies as per market cap and their valuations, and we are seeing that the valuations will not change in FY24 to a lot of extent. And lastly, in terms of analyst recommendations, well, a lot of analysts are still bullish on the FMCG sector, where ITC, Dabur, Marico all have a lot of buy calls and a lot of hold calls as well. So this is the overall view on FMCG sector and why it's buzzing in trade in the past 2 sessions.
Right, thanks for that. And that's a great sense of what you should be watching out for. Remember, we'll talk more about this tomorrow as well with our guests about whether FMCG now still deserves a mention in your portfolios after the run-up that we've seen. But the big news, of course, is PM is the development around politics, Tamanna.
Yeah, and I will just show you that still picture. So the Prime Minister has officially resigned because that's the process to form the next government. He has to resign as the Prime Minister because this term of the Lok Sabha ends, and then he has visited upon President Murmu, Draupadi Murmu, and formally staked claim to form the next government. Now, the reason that Prime Minister Modi can do that is because his party, the BJP, is the single largest party after the elections, and Draupadi Murmu would have called upon him to form the next government. In fact, Maria Shakil has this report for us.
Yes, that's right. I think because people close to Chandrababu Naidu, and as Vasudha and Veera have been indicating, Gargi, have been tight-lipped. Mr. Naidu is a very, very wily politician, just as Nitish Kumar is. They are quintessential, war horses of Indian politics. So they have seen the ups and downs, they have seen governments, they have seen transitions, they have been in power, out of power, so they understand how crucial it is to stay tight-lipped, particularly at this crucial juncture. That is the reason why Chandrababu Naidu hasn't said much except for the press conference that he did. So has Nitish Kumar, not said a word except for Abhinandan or Naman Karta Hoon in the flight, while Tejasvi Yadav, his former Deputy Chief Minister, was seated next to him. So I would say that there has been no talks whatsoever till now between Mr. Naidu and Prime Minister Modi, between Mr. Naidu and anybody in the government, between Mr. Nitish Kumar or anybody in the BJP.
All right, so that was Maria Shakil reporting from outside the Prime Minister's residence on what is next. And now, interestingly, Niraj, because this is what the street is watching, right? Sources to NDTV network saying that Home Minister Amit Shah will be a minister again in the new government. Rajnath Singh, Nitin Gadkari, S. Jaishankar, Piyush Goyal, Gajendra Singh Shekhawat, Bhupendra Yadav and Smriti Irani, despite her losing her seat from Amethi, are some of the names being pipped to be ministers again. There are some notable exceptions or omissions from this list of the ministers in the previous regime, the finance minister being one of them. So that's what people are going to watch.
Yeah.
Who's the next finance minister? We also spoke earlier today about how TDP, Chandrababu Naidu's party, is asking for one ministerial berth for every 3 MPs. So 5 to 6 go to him. Eknath Shinde with 7 MPs might get 2 ministerial berths if that formula is accepted. Negotiations are on. And you might have this another 4 or 5 for Nitish Kumar. So that's one thing to look at. Another update for the market to watch out for. It is likely that Prime Minister Modi could have his oath-taking ceremony this Saturday itself. So if you were hoping for, one weekend of no action, that's not going to happen.
But maybe this is action that people might like, actually.
Oh, no, this is very, very important.
From a market's perspective, it's a big respite.
It's a big respite because you now know that the government is being formed. Those letters of support is what I would say, if you want, if you're really picky about sealing the deal,
This is done.
You would wait for letters of support which need to be sent to the president by the alliance partners.
Yeah.
Saying that, yes, we support this government. So, yeah, that's the long and short of it.
Yeah, and this is the longest, this is the shortest long and short of it, to be very honest, simply because it's so important a topic. Let's talk about that with Jitendra Gohil, Chief Investment Strategist at Kotak Alternate Asset Managers Johnson as well. Jitendra, it's been a while. Thanks so much for taking the time out. How do you approach this development, Jitendra? The market has erased all of the gains or losses over the last 3 days. We are back to Friday closing, pre-exit poll closing. At the current valuations, with the current composition of a coalition government, what's your stance on India?
Hey, hi, and thank you for inviting me on your show. It's been a long time. Yes, I think, see, from a country perspective, from financial market perspective, from economy perspective, I don't see any major change that has happened, right? So Prime Minister Modi is going to be there, NDA is going to form the government. And if, let's say, this verdict was there on 2019 election, we would have cherished, right? And this time around, the expectation was so high that the outcome was little weakish, and then market, started to have all these probabilities. But now the confirmation is coming in. We are going to see stable government at the center. This is what market wants, and this is what they are getting. From economy perspective and from stock market perspective, what we are going to communicate, and we have been communicating, is that look, one leg, the investment-led growth that has been there, and it also had some kind of multiplier effect, and hence the GDP growth was lopsided, right? So while the growth was growing at around 8% odd, we have seen that is largely led by investment-led growth. The other leg, which is consumption, which is still more than 60% of our GDP, has been a little bit weakish. But last few months or so, the monsoon, expectation is now better than last year, and also the rural consumption has started picking up. So this rotation was inevitable in our view, and hence we think that the market will remain a little bit resilient, probably another 3-5% correction possible. But in our view, the trajectory, the growth trajectory for India earnings remains intact. Only the valuation part will see some kind of cuts in certain pockets which were frothy. So some rotation, but overall we remain constructive on equity so far.
Okay. Jitendra, do you guys, I don't know what the mandate of the funds or the schemes that you manage is, but do you guys look at it thematically or sectorally, and is that changing now, or it's still present, continuous, if you will?
So it is little early to say, Niraj, but what we look at, yes, you are right. There could be some rotation that we are expecting, because the leg that we have been playing so far on domestic capex related sectors, cyclical sectors, that has actually run up so far, and the narrative for the market is going to change towards slightly a defensive play. We are already bullish on pharma companies, which we remain bullish. However, we think that after this verdict, and also because the fundamental shift is happening, like consumption is picking up on the ground, monsoon is going to be better. So we might want to rotate portfolios. So, for example, the sectors that we continue to like, and we will maintain our positive view, will be real estate. We think that real estate companies, if on corrections, they offer very good buying opportunity. We are also of the opinion that in the second half, the RBI might ease their policies. Starting with, let's say, internationally, ECB might want to start cutting rates. US eventually will have to cut rates. So net, I think in the second half, the monetary condition is going to ease, and hence real estate kind of sectors that we like. Also, some sectors which are linked to real estates, we started buying, and we have been holding very positive views there. The rotation that we can think of is rural-focused NBFCs, which have been a little bit languishing. So we think that rural-focused NBFCs, which are which funds mostly the auto and ancillary, I think those kind of NBFCs we would love to buy at this point of time. Second, we have been very positive on PSU banks. We have started booking profits, and after this verdict, I think the devaluation, there could be some probability of derating of some of the PSU banks, and hence we think that the private banks, which have remained on the sidelines, over the past few even years, some of the banks have been underperforming significantly. I think private banks, rural-focused NBFCs, and then the real estate and allied sectors, I think this is a sweet spot, apart from pharma that we already have a positive.
Jitendra, hi, Tamanna here. Just wanted to take that forward when you're talking about the focus on consumption. Do you see a further push on the premiumization trend when it comes to consumption? Because that's been the big theme. And just your view on autos, because before all of this tumultuous last couple of days, the auto numbers got buried in all of this, but they weren't quite bad. And autos has been on an interesting trajectory.
Yeah, Tamanna. So, a few things in terms of consumption. FMCG, if I look at, they have already done so well over the past few sessions or so. So I think most part of the rally is captured. And remember, FMCG is like a 15% max, CAGR story, because they are not cheap. And this is completely a flow-driven rotational kind of a play. But within the consumption, you are right, the premium consumption. So we like hotel stocks. We think that some of the hotels which have fallen 15, 20%, even higher from their peak, I think it's a very good buying opportunity. We think travel, tourism is a multi-year opportunity, and hence some of the hotel companies that have fallen off the cliff, I think those are the better ones to get at this point of time. Second, we also like airline companies. I think fantastic outlook in terms of number of airports and the kind of premiumization that you talked about. I think in that theme, we definitely like airline companies as a whole. So within consumption, we'll pick pockets. In that auto, within auto, we like auto ancillaries.
Right.
Why? Because we think that the OEMs are going to go, heavily in terms of expanding capacities.
Right.
OEMs are better positioned, but I think it is better to go for auto ancillaries where, I think margins will remain capped, but in terms of growth opportunities, because EVs, new hybrid kind of vehicles, content per car, export opportunities. So I think
and I suppose Jitendra,
plays
the EV play as well. So Jitendra Goyal there with a whole host of ideas that we're looking at. Thank you so much for speaking with us today. It's been absolutely great hearing your views. Very quick break, but just taking that consumption story forward. We have a very special guest on the other side. PVR Inox's Ajay Bijli speaks to us exclusively after this very short break. Stay tuned for all that and more. We're speaking with PVR Inox this afternoon, and Ajay Bijli, the managing director, is joining us now live. In fact, from the iconic Lido Theatre in Mumbai's suburban areas in Juhu, which PVR Inox is modernizing. Mr. Bijli, thank you for speaking with us here on NDTV Profit. Great to have you on. Let's begin.
Thank you for having me.
Absolutely.
Thank you.
Let's begin with what we're doing, what we're seeing right now behind you. Tell us about the plans with Lido and what the appeal or the USP is.
Well, it's a very iconic cinema which has been around since 1950s, and we got the opportunity by the current owner of the cinema to convert this into a threeplex. So it's a very a modern threeplex, but we've still tried to make the design in very Art Deco manner. The legroom seat width is somewhere between a recliner and normal seats. It's 1500 millimeter and 750 millimeter in width, so which is almost like a business class sort of a seating configuration. 326 odd seats, and it's a 125th screen in Mumbai. Very excited about it, and to revive an old cinema and carve it out into a modern day multiplex is something which is very exciting in a great location like Juhu, which is the hub of Hindi film industry. And Bombay itself is, the capital of Hindi film industry. So it's quite exciting to, open the cinema here.
Just trying to understand with Mr. Bijli, because I've been seeing a lot of new launches being announced by PVR Inox in the past, few months, and all at iconic locations. What is the kind of revenue contribution these come into? Where does this fit into your entire strategic plan?
Well, we've opened about 45 odd screens this financial year, and which is we are hardly into 2 months now, and so cherry picking our locations very carefully. It can be a standalone cinema like this one, which is converted into a threeplex, or it can be part of a mall. We opened I think a 14-screen complex recently in Bangalore as well with Phoenix Mills. So I mean, these are all value accretive. We are very, cherry picking all our locations, cherry picking the demographics where movie consumption is high. So specifically, how much this is going to contribute? Is it, maybe 12 to 15 crores revenue a year. But every property that we pick up is at a unit level economics. It's at about a 4-year payback, and we look for about 25% EBITDA margin. So that's our going in capex, and our opex is fixed like that. So that's the intention. Doesn't matter where we open the cinema, whether it's a premium cinema or it's a mass cinema or it's a luxury cinema. Our economics remain the same. Roughly, this cost us about 4 crores a screen, because a standalone cinema, so a lot of infrastructure we had to pay for as well. Normally, when you're in a shopping center, the infrastructure comes along with the shopping mall, which the developer contributes towards. But this was slightly higher than about 1 crore per screen higher. But the number of seats are very less. It's only 326. But this is the kind of revenues this will generate.
Mr. Bijli, in terms of your outlook, since we're getting the opportunity to speak with you, and like you said, just 2 months into the new financial year, I wanted to know your outlook on how FY25 is panning out for you. We saw your FY24 numbers. You've spoken about improving margins in your conference call as well. How do you aim to do this? Will you see higher ticket prices, driving footfalls? What's the plan here?
Well, first 2 months, I must confess, got impacted by, the elections as well, because it was a very long period of elections, and therefore a lot of movies did not get released. But from June onwards, there's a huge pipeline which had got bunched up, which is coming up now. We've got a movie called Chandu Champion, which is coming shortly. We have a very big movie, Pushpa 2, which is very big. So big film, Kalki is coming end of June as well. Sorry, I forgot about that. Prabhas is very big movie. So I think now June onwards, I think it's looking very good, the lineup. In terms of, the merger itself has brought in so many synergies in terms of cost optimization, whether it's COGS, which is cost of goods sold of our F&B products, whether it is manpower, whether it's electricity. Also the revenue side, 2/3 of the synergy that we spoke about of 250 odd crores was to come from F&B, ticket pricing, and also optimizing footfalls. We've come out with a passport of 349 rupees, where 4 movies can be watched in 1 month, and 99 rupees offer of unlimited popcorn and Pepsi. So all these things are optimizing our footfalls that we want in our cinemas, and cost optimization is just by virtue of the economies of scale we're getting with such large merger that we've been able to do 12 months ago.
I was just taking on from that. You said elections has been tough, but I know you have tied up with Star Sports to screen the World Cup. There were some movie, cinema halls that had offered election viewing as well. Just trying to understand this alternate model to get more footfalls in. Are you going to build upon it?
Look. Well, India is a very robust movie market. 1,700 films get released in our system, which is massive, which is very large, and about 900 million tickets get sold in India. So I think our mainstay will always be movies, and the way we are spread out, our 1,700 screens is in every region. But however, at the same time, we're also a venue which has got seats, has got air conditioning, has got big screens. So we're also thinking of what if we do some alternate content. We showed Taylor Swift's Eras tour last month, BTS a few months ago, then cricket matches, World Cup, stand-up comedies. So we were thinking, why not? Why not use the venue as well for other purposes and make them repurpose them rather than just having it for the cinema? So not much revenue, but still about, I think, 1%, 1.5% to 2%, revenue still come from these alternate programming. But I think mainstay will always remain movies. At the same time, we are repurposing some of our cinemas, the newer ones which are coming up, to facilitate gaming, to facilitate live theatre. So for that, the infrastructure has to be modified a little bit, but we don't mind doing that because I think, as I said, the venues are great, the seating, hospitality, food, the locations are fantastic. So why not use them for other purposes as well? And World Cup is only 20 overs. So T20 format is something we found it to be quite successful in cinemas. When the format becomes longer, I think people get restless. So I think a football game or a T20 match is still something that can be shown.
Is it sort of also a requirement because more and more people are getting used to watching content and waiting for movies on OTT? I have to get your view, Mr. Bijli, on the whole OTT versus cinemas debate, which has been going on since a few years. Some would argue that having all of these alternative views of revenues is testament to the fact that you need a plan B or you need to buffer up the core business.
I don't think so at all. As I said, I looked at myself as a venue, and with 1,700 movies coming in India, I don't have to look at a plan B, to be honest with you. And this whole debate about OTT versus is more about coexistence. I think it's, I've given these examples, even I'm slightly feel jaded of giving these examples. It's like having a kitchen at home or Zomato delivering you food at home and then going out to a QSR or a restaurant. I think people are not straitjacketed. They don't want to do the same thing every single day. That's why we still sold 900 million tickets. When I say we, means the industry, cinema industry, 900 million tickets of the first year of opening after COVID. And second year, again, we sold 900 million tickets. PVR itself sold 150 million tickets in the first year, 150 million tickets on the second year. That only goes to show that people are going out. Yes, India is a very disparate market. Some consumers still want to be at home, but what they're watching is TV shows. TV shows, people are watching at home, but when it comes to movies, which they want to see, the FOMO factor is still back. There's an 8-week window between theatrical and a movie coming on any streaming platform. So that 8 weeks is a hell of a lot if people want to watch the movie and the peer group has seen it, their friends have seen it, their family has seen it. Movies like 12th Fail, Lapata Ladies, Crew, Shrikant. People are coming to the cinemas and watching it. They're not watching it at home. Lapata, of course, 8 weeks have lapsed. That's why they're watching it at home. Prior to that, it was playing at the box office.
All right.
So people do both. It's it's sort of either or. Yeah. People do both, basically.
Yeah. You need somewhere to go out as well. Thank you so much, Ajay Bijli, for speaking.
Yeah. Otherwise, I won't be building cinemas. Okay.
Yeah.
Okay, thanks a lot.
Thank you so much. Great to speak with you, Ajay Bijli, Managing Director of PVR Inox, there on one of those new launches, but they have 125 slated for this year. Niraj, when did you go to the movies last? It's been a while.
Been a while. Yeah, but the journalist life after a channel is launched for the first 6 months.
So we're not the target group. We're the sad people who don't get to go anywhere.
Yeah, well, it's great to go there and sit and munch on the popcorn and watch a movie.
Yeah.
I wonder if Siddharth Khemka and Himen do that. Let's ask them this question as well, Tamanna. Himen, I'll start off with you. A view on PVR and whether you go to the movies currently.
Honestly, Niraj, I haven't gone to a cinema theater in 10 years or more.
You're essentially even less of a target audience than me and Tamanna are, which is fine, okay. But do you have a view on PVR, Himen?
Yeah. See, we've had a couple of hits and misses. Frankly speaking, I think we've had Cry Wolf, and this time it's finally happening. What I mean to say is we've come off quite a lot, and it's been down for almost 9 months, 8-9 months, Niraj. I think yesterday's low, obviously the whole market has done that. There's been some volume and these levels have held. A close above 1345, a close above 1350 would mean the first technical green shoot. So I would stick my neck out and say that the worst is almost over. And a weekly closing about 1350 would sort of give me more conviction that, and maybe even a reiteration that yes, it is over. So not much to lose from here. Very strong support at 1280, but a close about 1350 and the 55-day exponential moving average is almost there, Niraj. So two things would happen at the same time. So that happening, a bounce of at least 100 points is around the corner. It may not mean 2 days, but probably 4 weeks, Niraj.
I tell you, it's a movie show right now on the bourses, and it's apt time to get in Siddharth Khemka as well, because almost everything is bouncing back and bouncing back very, very strongly. Siddharth, a big, a redo of sorts related to what happened yesterday. Now, my question is, what have you guys told clients today with this bounce coming in, PM Modi taking the oath on June 8th, so on and so forth? Have you told people to put in fresh money to work? And if so, are the pockets different than what they have been in the last 6 months?
Yeah, good afternoon, Niraj. Yes, so has been a roller coaster ride last 3 days post the exit polls. Monday we had a sharp rally. Yesterday we saw the carnage, and again today I think there is a good relief rally after the new media reports suggesting that PM Modi would form the government and kind of removing the concerns from a lot of angles, a lot of participants that who will form the government, how it will be. So it reduces the kind of noise. What we have been saying since yesterday is that the government formation will happen, and most likely the NDA government would form a government. So the policy continuity is something that we continue to harp on. While the numbers would be lower for the NDA government, but the policy would continue, and hence more or less the sectors continues to remain the same. Yes, there has been a pocket of you can say the PSU stocks which were overvalued and liquidity chasing them. Now we believe that could kind of go into a consolidation, the likes of defense, railways. While the long-term fundamentals don't change, the valuations does change, and the view and liquidity would change in the near term, and that could lead to some consolidation in the near term. We asked clients to put in money yesterday also in the fall. We listed down a lot of stocks in the blue chips, in the mid caps, where the fundamentals continue to remain strong. They're not dependent on the government policies. And if you look at some of the sectors, for example, banking, the credit lending, that is something that we have been liking. The other sectors are the consumption space. Monsoon is expected to be good. Rural recovery is something that we are hoping for. We have a lot of management commentaries indicating that rural, after almost 2.5 years, is outpacing growth in the compared to urban, which continues to remain steady. And the election outcome, we believe that there could be an additional impetus from the government in the upcoming budget towards the rural side, towards increasing spending, reducing some of or rationalization some of the taxes that could help the government at least improve the overall sentiments around them. The core theme of capex, I think that would continue to do well, bearing the near term where volatility could continue and some consolidation. But again, the budget would be presented in a month's time, and again those themes, the pet capex theme, would again be back into action.
All right, Siddharth, an interesting take over there on a day of a massive recovery. Just want to get your take on how much of more upside you see, because a lot of what we're seeing in the market over the last couple of days is linked to all of the political action. And the next 2 days of this trading week also become crucial, because if you're going to be seeing a swearing-in ceremony by Saturday, you will have by Friday a fairly clear picture of the composition of this government, what ministries, possibly allies are getting, etc. Are we looking at maybe ending the week in quite a robust fashion after the Tuesday knock?
Yeah, so Tamanna, I think that is what should be the case over the next few days. the market will be focusing on the government formation, what ministries, which party gets, or who becomes the minister for some of the key portfolios, be it home, defense, railways, and the most priced the finance, which is very important for the markets. And after that, we also have the RBI policy outcome on the Friday. The commentaries regarding that would also kind of be in focus. So what we expect next 2 days, the improvement in the overall market sentiments, that should lead to some more upside, at least in the near term.
All right. Now, even as we're talking about all of the political action, it's not like specific stocks aren't running related to this. And Niraj, I'm going to come to you for this very interesting piece that you've got about the Chandrababu Naidu effect, or the TDB factor, as you're calling it.
Yeah, well, not as much of data, but off my hat, from whatever little I remember, Tamanna, I'll put it out, so we may not have graphics for the same, but some of the reasons why some of these stocks might be active, right? So, okay, let's start with cement, and both Ramco Cements and KCP are active. Now, keep in mind that Chandrababu Naidu had this Dream City project, which was shelved under the previous regime. Now that he's back in the fold, the belief is that the Dream City project will again restart, and therefore to build out a city of sorts, right? You need, amongst everything else, resources like cement and steel. Now, why are these two stocks in focus? Because Ramco Cement's facilities, and it's one of the larger players in that region, will actually see some bit of cement output uptick there. The reason why this small stock, KCP, which is a mix of cement, sugar, and some others, is because KCP has a cement plant which is across the river from the site of the Dream City. Imagine having a cement plant within kissing distance of a new city being built. The belief would, in the markets would be, we do not know this, we do not know if this is how it will fructify, but I can tell you this is what the markets are thinking, that the cement from this plant, of a 3 million ton plant, if I'm not wrong, that KCP has, will cross the river and be available for construction out there, and which is why KCP has gained quite significantly in trade today. So both of these stocks, very active today. Beyond that, we've all spoken about Heritage Foods and how Chandrababu Naidu's wife is possibly, if I'm not wrong, still a 24% shareholder here, and which is why this stock, and by the way, we marked this stock yesterday on the trade setup, if viewers would remember. It's up 20% today. This is after an up move in trade yesterday as well. In the last 3 days, Heritage Foods has arguably been one of the best performing stocks. So week to date, I don't think there's a better performing stock than Heritage Foods. And then Amara Raja, again, a company belonging to Jaidev Gala, a former TDP MP, and therefore no current connection. But obviously, if you have been in the same party for years, people would want to put 1 plus 1 is equal to 3 and try and second guess, etc. So a lot of this right now is the market's belief or hypothesis about good times ahead for these companies. There's nothing to suggest that orders are given or stuff that is happening or so on and so forth. But I'm just telling you the reason why this is happening. And Tamanna, at times, it is not about earnings coming in, but just the sentiment changing. And boy, has that sentiment changed for these stocks.
You know, Niraj, I often say this, that the invisible threads that link companies, performances, the markets, business, and politics are so ever present that it's interesting when you see some light shed on them once in a while. But the fact is that nothing happens in isolation, and these could be fundamentally good companies, not saying they're not, but this is the key reason why they're buzzing today. Himen, any of these that you track on the charts?
But while Niraj was mentioning, I looked at every stock that he mentioned. KCP looks very interesting. It's formed a base. It's given a breakout from a rectangle pattern on the weekly chart. So that looks interesting. I'm saying this weekly chart because the week is not yet over. We have 2 trading sessions left. But if these levels sustain till Friday, it looks like, I think there's a breakout coming in. And the dark horse would be Ramco Cement that you mentioned. So Tamanna, we've been down for 1, 2, 3, 4, 5, 6. This is the 7th month in a row. Okay, this month is not counted. We are only just 5 days in it. So 6 months we've been down. And now it's getting oversold, deeply oversold. The second round of positive divergence, a weekly upward key reversal. Simply put, I think Ramco Cement, less to lose, chances of a recovery seem bright, and this could probably be a 2-3 month recovery, Tamanna.
All right, so Ramco Cement is also could see a recovery. Siddharth Khemka, I won't ask you to talk about any of these specific stocks unless you have a view when you track them. But just in terms of the kind of moves we might see over the next few months and the policy push which comes in, where would you look at the rail space? And the reason I'm talking about the rail space is the buzz right now is that one of the ministries that could go to alliance partners is Railway Ministry. Nitish Kumar has run the Railway Ministry in the past. I mean, it could go either way. Do you think that the Railway Ministry possibly being with an alliance partner and not the BJP dents the enthusiasm for the stocks, or there's going to be no real difference?
So, Tamanna, if you see the name that is coming up, he has been a great leader and in his state, a great administrator. So, if someone like a charismatic leader like him comes to a railway ministry, I think that will only bring in more focus and efforts, especially from a alliance partner, so that they can show to the country that how much efforts they have put in to improve the railway. So I think that is something which will only go to become positive in the sector. And with the support from BJP, I think the focus on the entire infrastructure capex theme that would continue. Some of the policies that the previous regime has initiated, the NDA 2.0, I think that would continue with the focus on manufacturing some of these wagons in-house in the country, expansion of the railway networks, signaling system security, and that leads to a strong business opportunity for a lot of these players, both in the public as well as in the private space, catering to the railway segment. So I think the demand for railways in a country like India would only go up, and an able administration would only help grow the opportunity size for the sector.
Himen, as we wind down last few minutes of trade, what is your call for tomorrow? Buy today, sell tomorrow, and like Niraj is saying, would you want to sell today, buy tomorrow? Any of those strategies you have in place?
No. STBT out of the window, I reckon, looking at the market like this. Don't you think?
Yeah, but why don't we? Might want to book some profits if you've played it smart. Let's see what Himen has to say.
I would do a BTST. I agree. STBT, frankly speaking, doesn't quantify at this point in time. Something like a Bharat Forge, look, I would say Magad Sugar, but it's not an FNO stock. So something like a Bharat Forge on a BTST makes sense, but no. STBT, despite a little bit of heaviness in the 15-minute charts, I don't know we should get that minute, but I think a BTST on Bharat Forge.
BTST on Bharat Forge 15.11, and what a change 2 quarters can make from February when they gave that negative commentary to what the stock has done now. Quite fabulous, really. Okay, so BTST on Bharat Forge giving there. Siddharth, come on, leave us with one name that the house would have, one or two top names that the house would have recommended their clients to buy today.
So, Niraj, we recommended 2 stocks today very aggressively. One is State Bank of India, SBI, which got hammered sharply yesterday and which is still not recovered today, even in the market recovery. So, we believe the banking space would do well. The credit growth should be in the range of 14-15% for the year, and SBI has been the leader of the pack with the strong credit growth, asset quality, and we expect the growth to sustain over the next 2 years, ROAs to sustain over the 1%, and valuation still being comfortable. The other is more from the defensive space, you can say the consumer space, which is DMart. We are seeing that DMart is witnessing a good recovery in both revenue as well as some of its large store formats where it was seeing a decline in profitability. That is also started to improve. So revenue per square feet and revenue per store, they are all improving. And along with this, we are expecting that consumption demand will improve going forward. The inflation is under control. That is also leading to some cost moderation. And the stock has kind of consolidated in the last 1.5-2 years. So that also brings in some comfort in terms of valuation. So going forward, we are expecting revenue CAGR of 23%, PAT CAGR of 35%. So that is something, the growth we are looking at in DMart, and also gives a defensive addition to your portfolio in the current volatile environment.
Okay, Siddharth, thanks so much for joining and giving us that perspective. Hemant, very quickly, would you carry home an FMCG stock if it's a trade? Any FMCG name, HUL, Emami, what have you?
Yeah, I wouldn't mind. Yeah.
Which one?
Dabur.
Okay, and Hemant, just a slightly longer answer. The targets for Dabur?
Targets for Dabur is okay. Target for Dabur will be 635.
635 for Dabur. What a comeback for Dabur. I mean, for the entire FMCG pack, all the notes, every house that we're speaking to is talking about the consumption story once again. So that's their time to shine. Thank you so much, Hemant. Thank you so much, Siddharth, for speaking with us today. We're looking like a fantastic close. At the start of the day, one wouldn't have predicted such a change in mood. To some extent, yes, but not this kind of a robust move, Niraj.
Yeah, this is quite stunning, really. And let's see how this shapes up for tomorrow, because this is a recovery of quite another magnitude, really. And the banks are leading the charge, as the Nifty Bank is showing. But it's not that the broader markets are not performing, and very few stocks in the red, which is a beauty. I think this sets up for a very exciting last 2 days of trade, Tamanna, before Prime Minister Modi takes in the swearing-in ceremony on Saturday. So packed next 2-3 days.
I would reckon, if the name of the FM becomes very, very important. And remember, no government has to reveal who is getting what ministry portfolio. The order is usually swearing in. Some ministers can swear in at that time. You can have a second ceremony as well. Everyone doesn't have to swear in at the same time. And then portfolios are distributed. The only sort of worry next week will be if there is a lot of gap between the swearing in and the portfolio distribution. Then you would have worries about whether negotiations have gone wrong. But seeing the way that the BJP functions politically, it's doubtful that they would leave it to chance. They will stitch everything up, is my guess, and then go in for a swearing in. So once an official swearing in is announced, and remember there's a big meeting of the NDA at 5 p.m. today. So by tonight you will have a clearer picture. It's still going to be interesting times. A lot can change in 24 hours, as we have seen in this last week in terms of mood and outlook. India Alliance is meeting this evening. NDA Alliance is meeting this evening. Remember, all of that coverage right here on NDTV Profits. You don't have to go anywhere else. All of that is going to happen. So we have to see where the chips fall by the end of the day. That's also going to be important. If it's all stitched up and sewn nicely and neatly, by tomorrow, I reckon you could see another big jump and another day of gains. You've heard from Chandrababu Naidu today. We've not quite heard from Nitish Kumar. So once that is done, once letters of support are sent by these two leaders, it's then a different trajectory, one would guess.
Yeah, well, let's wait and watch. But with that, and an exciting afternoon, it's a wrap on this show from Tamanna and me and the team that put this show together. Thanks so much for watching. But stay tuned, more live updates coming up on NDTV Profit.
Hi, thanks so much for joining me on this special broadcast of the Mutual Fund Show. Equity markets have seen significant volatility this week. It's been a bit of a roller coaster ride. A sharp run-up on Monday, a crash on Tuesday, and a recovery today. Where does that leave you if you're investing in mutual funds? There's something that gets said quite a bit in Mumbai, and I think it's relevant today. Kaiko tension lene ka? If you had not looked at your portfolio this week, you likely would have slept better, and chances are that you'd be more or less where you were last week. But it's still important to know what the trends are and how you should react. And to that end, I spoke to Swaroop Mohanty of Mirai Asset and Trideep Bhattacharya of Edelweiss AMC and began by asking whether their fund houses saw increased redemption pressure this week.
No, actually, it was as per predicted. I mean, we've been seeing this reaction for a long time, and the faith of the Indian investors on long-term equity investments were reaffirmed yesterday. Day before, of course, there were a lot of questions, rightfully so. But yesterday, we saw inflows across funds. I mean, both active, passive factors to our market cap ETFs to our active funds. We saw inflows across. It's a good thing to see, that investors are changing their stand in the market and looking at opportunities to deploy, which was such a refreshing day yesterday. We went back happy, actually.
Okay. Trideep, did you see, what was your experience? Because it's counterintuitive, one would say, in a market that saw the benchmarks fall 6%, the broader markets lose ground as well. Swaroop saying his fund house saw inflows.
So actually, I would agree with that. I mean, we also saw inflows across strategies and across so-called segments of equities. And I would sort of put the context as that heading into elections, there was a bit of a volatility in terms of the vote count. Of course, the exit polls caused one-way outcome. But if you go to basically days before that or a month before that, we saw a bit of volatility in and around the market. So I think markets went into it a little light. FIIs were obviously massively short, but on the other side, the positions were reasonably balanced. We saw volatility coming about, but I think there were the shaky hands had a bit of a time to sort of do so before. So hence, yesterday, when the markets crashed quite a bit, we actually did see inflows. The final thing that I would say on this is net. Yesterday's closing Nifty levels is same as what we saw in early May. So barring the exit poll drama and the subsequent reality, we are not far off in terms of market levels.
Equilibrium is sought and found often in these cases, but it's heartening to see two large fund houses tell me that they saw inflows on a day where you saw such frenetic selling, and that to me indicates that the mutual fund investor by and large is learning to be more pragmatic and focused on the long term. From the fund manager's standpoint and from wearing the hat of a fund manager, Trideep, I'll come to you on this one. How do you navigate this and how are you approaching this? Because yesterday would have presented several opportunities with stocks falling, 20-25% in certain cases. Is that a buying opportunity or do you wait for the dust to settle just a bit?
So I think the practical answer is a mix of both. What we do is we never buy full in one go, and at the same time we don't want to leave too much for the later. But I think I see objectively this event as an excuse for correction in valuations of those companies where the valuation multiples had really kind of shot up, given they were in trend, so to speak. And if you take that valuation correction away, I would say net between a month ago and now, most likely 99%, we have a same government. We will probably see the key ministries remaining the same, and hence maybe we have a coalition for government, and hence maybe to a certain extent there might have to be a little tweaking in the policies. But little tweaking in the policies is very different from policy reversal, which the market seemed to be worried about yesterday. So from a medium-term standpoint, the earnings potential don't really change. It is just that what valuations in some of the in-trend areas, they have taken a haircut of about 20-25%, which in the grand scheme of things is quite healthy, is the way I would think about it.
Okay, so that's the fund manager perspective. Swaroop, you've got your ear to the ground and you speak to a lot of large investors as well. The smart money, one would assume, does what Tradeep is doing with his funds, which is to deploy selectively and to deploy strategically and take these opportunities to average your cost. Is that the right approach?
Yeah, absolutely. I mean, there's no doubt or debate on that one, because at the end of the day, it's this average price that will define, and how much you accumulate at that average price will define the wealth you accumulate. And that's what we tell all investors also. If you are ready to buy day before on some government formation news, you should be buying more today at these levels. Now, there are two types of people in the market. The seller wants the market to go up. The buyer wants the market to go down. You have to decide who you are. If you are a buyer, then if the market goes down, you should be happy. And then many people sort of keep it simple on that philosophy and continue buying this long-term story called India.
Okay. Last couple of questions, gentlemen. Tradeep, some of the froth that people were talking about and have been speaking about all of this year seems to have been skimmed off. Would you say that that would be a fair assessment? And do you anticipate at all that there could be a shift in the kind of flows that come into mutual fund schemes? Is that something that you are preparing for in the broader end of the spectrum at least?
Look, I mean, I think overall the way, I'll give you an answer in a roundabout way. Flows is an outcome of how the companies or the market, or how the market does. Market is a function of how the earnings do. And between flows, market and earnings, the more predictable one is the earnings. And there I would say that the earnings story of India, which was robust, will continue to be robust. The fact of the matter is that the capacity utilization of India Inc., which is hovering around 77-78%, will not change dramatically within a day or two. And hence, the shape of the capex cycle may be too pronounced or less pronounced, but in some form or the other, you would see capex coming through. The power deficit scenario that we see is very much a function of where supply-demand scenario is in that segment. That is going to kind of, work its way in the earnings of companies which are exposed to the same. That doesn't change between 1 week ago and where we are now. And likewise, the real estate sector where inventories are at 10-year low, that doesn't change because the person occupying the seat has a little less number of seats than where things were about a fortnight ago. So if I put these things in terms of companies that are exposed to these areas, clearly the earnings of segments which are linked to these will continue to remain robust, except that between yesterday and today, the valuations are about 20-25% cheaper. So when I spoke to people earlier, I said that it makes sense to be selective then. And now, given that the valuations are cheaper, it makes us more look at those companies where we think earnings momentum is strong. The valuations made us stop. Now is a good time to sort of get in. So that is the target hunting area overall. That's one. In terms of the in-trend areas like the areas that I talked about. Couple of new areas where we have added over the last 2 or 3 months have been basically in the anticipation of rural recovery and also a bit of monsoon being on time on the FMCG side. And we talked about it earlier on the IT. We've also launched the technology fund. That IT, the earnings are bouncing around the bottom. So those are the two areas that we have added to in the last 2 or 3 months, which is coming handy in these times. But net-net, a bit of portfolio repositioning we have done over the last 2 or 3 months. And now, given this correction in some of the in-trend areas, our hunting ground is those places where earnings momentum is strong, but valuations are now 20-25% cheaper.
Very quick follow-up question for you, Tradeep. Are you keeping the powder dry? What is your cash management strategy right now?
Yeah, so I think we are not. We think that this volatility, on policy-related volatility, will be probably at its extreme now and will gradually resolve itself in a month's time. Once we get the the ministries announced and we have the budget, we are keeping our dry powder or powder dry to be just to sort of ease this through, ease our positions through, so that we don't overdo it in one go.
Okay, fair point. Swaroop, last word. We've seen, barring yesterday's kind of crack, we've seen significant solidity and buying, as you both pointed out, you've had inflows on a day when the market cracked. So would you anticipate that this will continue to be the case and people betting on a significant fall for the equity markets in India might be betting on the wrong horse?
Yeah, I've said this in 2016 and I stand by that now, today also. Redeem India at your own risk, right? So there'll be two types of people who strongly believe and have the conviction of India being a long-term story, which it is, and there's nothing taking away from anything from that story. Second, there'll be people who will, bet on event risk. Both have their own ways, and I'm nobody to comment on that. But if one wants to really benefit from the long-term India story, then one has to stay put in the story itself, right? Now, what has happened, and I can share that sitting with data also, is that we are a bunch of long-term investors because we've invested in the market for 15, 20 years. Unfortunately, making short-term investment decisions. That's why we don't catch the entire upside of the country. The sooner we reverse that, the better. It's at the own investors or advisors, call on how to take it. But it's impossible to build long-term. Tridip is along with me on this. He's the fund manager. I'm not. But he will bear with me when I say this. There's nobody who can predict. What you can predict is, yes, this country will go from 3.5, 4 trillion to 8 trillion. And you have to ride the journey till 8 trillion to get the benefit of that entire 8 trillion into your portfolio. Now, if you're going to time the market, call is yours. But leaving the market is easy. Entering the market may be very difficult.
That's a fair point. And one swallow does not a summer make. Gentlemen, thank you so much for taking the time and for speaking to us on NDTV Profit on what is actually an important day for the mutual fund investor. All right, and those two fund houses were not the only ones that saw significant inflows. I spoke with Akhil Chaturvedi, Chief Business Officer and Executive Director at Motilal Oswal AMC, and here's what he had to say.
Thank you, Alex. So I agree that while yesterday was quite a day, there was a lot of anxiety and obviously we all know how the markets were reacting. But contrary to what we thought, investors have actually tried to capitalize with the correction coming in. And we've seen some very good inflows. And inflows continue today as well. So yesterday was actually one of our best days for the collection. So I think the maturity level of the investors to buy on dips is quite visible now.
Okay, but there were redemptions as well. This is what you're saying is that I'm guessing people were sitting on cash and they were waiting to deploy, but there were redemptions as well.
Yes, Alex. So what we saw in the last 2 weeks were that the HNIs and some family offices did take cash call, and they were sitting on sidelines for clarity on the elections. Once the results were out yesterday, and obviously markets were a little jittery, and it corrected, and therefore I think they have taken the advantage of coming back into the markets, and that's how the flows have come back.
All right, so significant statements coming from multiple mutual fund houses. But let's talk about the direction that you should take and the strategy that you should employ. Does that change at all? Joining me now is Vishal Dhawan, the founder and Chief Executive Officer of Plan Ahead Wealth Advisors. Thanks so much, Vishal, as always, for taking the time. Appreciate your patience. What is the kind of conversation that you've been having with your clients? Have you gotten several frenetic calls yesterday? And I was saying at the start today, they say in Mumbai, "Kaiko tension lene ka." If you had not looked at your portfolio this week, and you'd pretty much be where you were last week.
Yeah, actually, I think, big events like we had yesterday just accentuate everything in the minds of investors very often. And, obviously when you see a headline which says markets are down 4%, 5%, 6%, and so on, it does create some level of either anxiety or opportunity. I think the reality of what actually happened was that where the markets closed yesterday was very close to where they were actually closed on May 10th. And therefore, if you look at it over the last 3 or 4 weeks, the markets are where they were. Something has happened along the way in terms of an election outcome, which was already a journey that had sort of started with voting happening in about 6-7 weeks ago. So I think this has just been a journey. I think we've been telling investors that at both the extremes, you need to be careful. There was a set of investors yesterday who were like, let's go and buy aggressively because markets are correcting. And we had to tell them and remind them about valuations and, the need to be framing their expectations correctly that, we are where we were about a month ago. And on the other side, there was another set of investors who were, there is so much of uncertainty going to lie ahead. So why don't I move to cash because markets are going to go lower and therefore I can come back and buy it. So I think depending on different investor views, we had to tailor our conversation to what their needs were. I think there were three fundamental things that we spoke about. Number one is ultimately you got to go back to earnings. If you believe that this event is going to have a big impact on earnings growth going forward, then I think you need to take action either way. Our view is that it's probably not an event which is going to change earnings dramatically unless we see actual policy change on the ground, which will only be known about a month from now. Second is that you are sitting in an equity market which is fairly premiumly priced, especially mid and small size companies. And even large caps are not really cheap. So we need to be mindful that, every decision that we take to allocate to equity today needs to be done with a long enough investment horizon that you're not exposed to shocks that come from overvaluation. And the third thing is that, don't do anything dramatic like stop your SIPs, stop STPs, try to shift your portfolio around too much, especially for a mutual fund investor, because we need to remember that every change also gets accompanied by money moving into cash temporarily by default, because there are redemption cycles that exist across product categories. And what might happen is by the time you redeem and want to come back somewhere else, etc., you might find that, markets have reached a different level because 2 days have passed. So I think our sort of recommendation was largely stay the course. You need to have decided much before the election outcome what you wanted to do, and don't change it because you had something which was different from what you might have expected.
Okay. We're also trying to get Harshvardhan Rungta to join us, but in the meanwhile, let me come back to you on this one. While you were speaking, what I was playing up on the screen, Vishal, is the kind of change that we saw in the NAVs yesterday. And I do understand that one day doesn't really make a huge difference in the larger scheme of things, but it's still important for investors to pay attention to this. It's interesting because the large cap actively managed funds actually saw a larger decline vis-a-vis the benchmark as compared to the broader market actively managed funds, with both mid-cap and small-cap actively managed funds being able to protect investor wealth. How important is this downside protection, and should you adjust your choice of scheme based on what you see in these kind of events?
So I think it's a great point. So I think we need to break this up again into two parts. One is that we need to remember that a large cap fund, for example, is allowed to have up to 20% of their exposure outside of large caps as well from a regulatory perspective. And what you found is that over the last many months, a lot of large cap funds outperformed the benchmarks because of this exposure to mid and small caps as well. And what has happened is on the reverse, like yesterday, you probably saw them fall a little more because mid caps and small caps fell more than large caps did. So I think the way to look at this is, while it's important to look at it from a downside perspective, I think it's also important to remember what is it that you are seeking in your investment strategy. How do you look at downside capture and how do you look at upside capture as well? I think for aggressive investors, they want a very high level of upside capture by default. And therefore, very often that upside capture will come with a higher downside capture as well. And vice versa, for investors who are looking for a more stable experience, less volatility, they may want to keep in mind that they look for funds that are relatively less volatile and make their decisions accordingly. And again, a single day may not give you a clearer answer. They might actually have to go back to longer term data, look at how upside capture, downside capture works, and then use that in their fund selection strategy.
The last question that I will ask you is strategy, and you already pointed out this is not a time for drastic decision making, stopping of SIPs, STPs, etc. However, I think that these instances and these events are a great measure for your risk taking ability or your risk comfort, the comfort of how much risk you can take. Because if you had a sleepless night last night, then that's an indicator to you. Would you agree?
Oh, absolutely. I think when big events of this kind happen, and they are probably resulting in uncertain outcomes, I think it does give you a sense, though they're not perfect indicators, because one of the things that we've seen over the years is that a very short correction, which gets followed by a recovery, like we've seen today, tends to make investors very often as complacent as they were earlier, because the period for which the correction happens is very short. I think the true test of risk tolerance and risk ability, handling ability, comes when you actually have a correction that lasts for a sustained period of time. So I think one of the things that investors may want to be mindful of is that if they just feel that, they didn't feel uncomfortable yesterday, and therefore they have a much rather risk tolerance than what they might have thought earlier, they need to test this out when there's a sustained correction for a longer period of time. Till they don't have that clarity, I think they might end up finding that they are just simply, being tactical at this particular point, because every time in the past markets have actually corrected downwards, they've actually come back up pretty quickly. So the true test is, when a buy on dip strategy does not work. Right now, what has happened is for a fairly sustained period of time, a buy on dip strategy has worked very well.
Yeah, and based on the kind of flows that we've been seeing, Vishal, I don't think that that's going away anytime soon. Of course, we'll have to wait for another couple of days to try and see what the flows for the previous month were, and hopefully they were encouraging. But thanks so much for joining and for giving us that perspective. I think it's useful to a lot of investors.
Thank you so much. Pleasure being here.
All right. Now, look, I think the long and short of it is that if you have a time horizon of the next 5 to 7 years at the very least, then events such as yesterday and the rebound of today should not worry you too much. Having said that, if you have gotten a jolt and if you were uncomfortable based on the kind of move that you saw yesterday, then it's perhaps because you might just have too much risk in your portfolio than you are comfortable with. We do discuss equity portfolios and mutual fund schemes in a lot of detail over the course of the week, so that I'd invite you to log in to the website, or in fact any of our social media platforms, or watch the show live on NDTV Profit at 1:30 p.m. every day. Do stay tuned.
Markets stage a recovery after yesterday's rout. FMCG stocks lead gain. Surge comes after the NDA pledged support for the alliance to form a government for the third time. Benchmarks end more than 3 percentage points higher. Prime Minister Modi is set to take oath as the Prime Minister for the third time on the 8th of June. He tendered his resignation to President Draupadi Murmu. The 17th Lok Sabha stands dissolved by the President. It is a crucial day of meetings. NDA allies to iron out who gets which ministry. Nitish Kumar's JDU demands a special status for Bihar. Sources tell NDTV that the TDP may ask for the Speaker's post. Meanwhile, the India bloc is also set to meet at 6 this evening, likely to discuss their next steps. Maharashtra's Chief Minister Devendra Fadnavis appeals to the party leadership to free him from the state government, says he wants to give full time to the party and the Vidhan Sabha. Good evening and welcome. You are watching The Reporter on NDTV Profit and I'm your host, Nupur Talwar Suri. Well, after yesterday's mayhem in the markets, the Sensex and the Nifty recovered today. All sectoral indices gained their early losses. Nifty FMCG led the way. Let's go across now to Harsh for a wrap-up of all the action that took place on the markets today.
Well, it's a stellar day for markets. We've seen a very solid recovery in terms of where the benchmarks stand today versus yesterday. More than half of the losses yesterday recovered by indices today. 3.4% higher on the Nifty 50. Even the mid-cap and small-cap, even the broader market indices did fairly well. 4% almost on the mid-cap as well as 3.3% on the small-cap. So largely in line with the benchmark where the small-cap is concerned. Let's pull up the heat map. Pretty much all the constituents of the Nifty 50 have closed in the green except BPCL and L&T. So those are the two names which have closed mildly in the red, not much. But look at the gains made by an IndusInd Bank and Adani Port, 7% plus across the board. And you'll see almost 30 stocks gaining 3% plus in trade today. So a very solid day of trade. It's basically the heavyweight Reliance as well as that Fin Nifty constituents which have really contributed. If we can pull up the contributors, that's what we largely see. HDFC Bank 100 plus points, ICICI, RIL, and then we have an M&M which has gained 35 points. Pretty much no negative contributors in trade today. 500 points straight contributed there from others outside those top four. So essentially the top four contributing over 200 points right there in front of you. Let's quickly pull up the sectoral chart as well and try and see which sectors have done particularly well. Metals, auto, banks have done fairly well. Banks were beaten yesterday. They've made a bit of a comeback, but essentially it's the metal index which is the top gainer. Of course, after yesterday's bit of carnage that was required. Auto and FMCG really good standout sectors in trade today. 5% higher on nearly on the Nifty Auto, but FMCG has really stood out both yesterday as well as today. The only gainer yesterday as well as one of the top gainers today as well. Let's pull up the Nifty FMCG index, try and zoom in, see which constituents have done essentially very well, and you'll see that list over there. Let's quickly pull up the BSE 500 as well to get a texture of the broader markets. You'll see some names which have done exceptionally well, and AB Fashion, it was up nearly 15%. In terms of the losers, it's a mixed bag, but you'll see some PSU names there, a Cochin Shipyard, Bharat Dynamics, so some flavor of an NBCC as well, some flavor of infra as well as defense there. Last off, two stocks we want to flag off on the back of politics. We have TDP owned, or rather we have Heritage Foods and Amara Raja Batteries both associated with the TDP, and both of those zoomed in trade.
In fact, staying with FMCGs, big players in the FMCG space are awaiting the formation of the next government. They're also hoping for reforms to be initiated in the sector. Here's what Anshu Malik of Adani Wilmar said.
I think the reforms will continue, and our expectation has always been that the way the country is progressing, reforms will also add, and all the food processing sector, because this is the food processing event, we all look forward to the support, and the Secretary was here, and we are quite happy with it.
So again, while you were speaking about the shifting trends of consumers, you spoke about how they are, more inclined towards taste, and then comes the price, and then comes the quality. How do you think that companies can, balance taste with the changing habits towards healthy food habits?
See, taste is supreme because that is why we eat food. Health is in back of our mind because when we eat, we are conscious about it. So when you blend health and taste, say rice bran oil is a physically refined oil, is a much healthier oil. And if you use rice bran oil to cook something, it is always good that it is a healthy oil.
Well, now moving on to the biggest story of the day, Prime Minister Narendra Modi tendered his resignation to President Draupadi Murmu earlier. Now, this, of course, after the process of government formation was set into motion earlier. We had that beginning with the fact that the cabinet met and recommended the dissolution of the 17th Lok Sabha. Let's quickly take a look at how this process actually unfolds. To begin with, of course, the Union Cabinet meets and recommends the dissolution of the 17th Lok Sabha.